Coming up next, does it really matter if you buy property during a boom or bust? Meet a property investor who believes any time is a good time. Let's move on and talk about property. Now, when is a good time to buy property? And according to property investor Tim Murphy, there's actually never a bad time to do so.
How can that be? I don't know. So whether the economy is in crisis or experiencing a boom, there's always money to be made in such investments, as we find out.
That's right. He says it's all about location, location, location. We spoke to Tim. He gave us some tips about buying property in Singapore and Asia.
And we started by asking him why he thinks that any time is always a good time to buy.
Well, I think this is the thing. In Asia, people are always buying in the short term, so they don't believe that you can buy when the market's up. But actually, I'm a medium to long-term investor. It was 9 years before I sold my first property. So I think if you're a long-term investor, then you can buy any time. But if you're chopping and changing, you're speculating, then obviously people are always looking to buy at the bottom. But I don't think that's the way to buy real estate. I think that's why we're in the mess we've been in the last few years.
But what if you buy when things are high and then you're stuck with it? So not waiting 9 years, but you got to wait like maybe 19 years, you know. Then, yeah, and that was the cash flow you had, and now you're stuck.
Yeah, well, I think that if you look at the Asian recession in '97, that's probably the only time when you couldn't have been stuck with property for 19 years in Singapore, say, because the market's always been going up. I think perhaps Japan is the only exception to the rule, but obviously you can buy at better times and worse, but I think if you buy with a good yield, and this is the thing for me, buy a good yielding property, times are good or bad, you'll always pay the rent, the rent will pay the mortgage, and you can sit tight with it. So I don't think you'll find many markets that are down over 19 years, right?
And so it's the kind of place that you pick, I guess.
Yeah.
Choose very carefully.
Absolutely, very much so.
Where in Asia would you recommend getting
Well, I think at the moment the developed markets are the ones to pick, you know. I don't think when times are difficult like this you go for the Vietnams and the Cambodias, even though I do like those markets. So Singapore has been very kind to me as an investor, and my clients at IP Global, we've done a lot in Singapore. So I still like this market, but perhaps we need to just wait and watch a bit in Q1 now. Hong Kong I still like very much. Believe it or not, I like Japan. The yields are very good there, and the cost of money is, well, everywhere is dirt cheap at the moment.
Tell us a bit about how you started off in real estate. I mean, it's quite an inspiring story, to be honest.
Yeah, well, I was renting an apartment like everybody does when you first move out of university, and I went to a mortgage seminar one day, and I looked at these stats, and I thought, wow, you know, if I can just borrow just a 4,000 Sing as it was then in sterling terms and buy a house, I can rent it out to my friends and get started. So I borrowed it off my mum. I bought this little awful house, which we talk about in the book. And again, you don't always have to buy sexy property, you know. The rent was fantastic. We all paid less rent. And I owned my first house, and I went from there.
Okay,
it was a great start.
200 properties since then.
Yeah, I was 22 then. I was a baby, yeah.
Well, but not too bad. You were thinking, got my own place, got my buddies with me, and I'm making some money from this, you know?
Exactly, and the money I was making, we put in a satellite dish, and we could watch the sport on TV. It was a great time.
It's so easy, though. I mean, it's not that easy, is it?
I think it's got more difficult because everybody tries to do it now. Everyone's a property investor, you know. There's TV programs everywhere, and I think people get fixated with short-term returns. I think you need to be prepared to invest for the long haul. When I first started, I was very much thinking about long-term rentals, getting a good rent, and then buying my next house and sustaining it. If you're just buying for capital appreciation with no yield, unless you've got a great job, you can't pay the mortgage. So it isn't as easy now, but it's certainly doable. But
you mentioned long-term rentals. When you say long-term, how long is long-term? 5 years at least? Is that the minimum, or? Yeah,
I think you need to be prepared. I mean, you might get lucky, right? I mean, somebody that might have bought in Singapore 3 years ago has got very lucky, but you don't know ever that's going to happen. I don't have a crystal ball in this book, you know, so I think you buy somewhere that you know you can safely rent out. For instance, if you live in Singapore, you buy where your friends and you know people will rent. There's a good rental market. Because ultimately, when you sell this thing, you've got to know that locals are going to buy it, not just investors.
Yeah, and you recommend Orchard area, you were saying. But, I mean, how affordable is Orchard for many people?
I still think that the most central parts of District 10 and 11 are very attractive because that's where the money is. But I think pretty much in Singapore, if you're a medium long-term buyer, you can buy almost anywhere. You know, there's good deals on HDB still even now, although you need a bit of money to put up front. But I think it's more about getting in the market. The world is full of people that I think there's a big takeout from the book who think about it for 5, 10 years. There's not going to be a major property market crash, so there's no point waiting. If you've got the capital, I think you should get into the market.
And of course, Orchard Road being the central area in Singapore here, but I mean, Singapore's so small, which is why I guess you mentioned almost anywhere would count. You also talk about getting good rental on it. Is there a percentage, like you should be getting at least a certain percentage of what you've put in to make it worth the while?
Yeah, I think it depends on the mortgage rate as well. I mean, a 10% yield in a market where interest rates are 15% is no good, right? So at the moment, you can borrow very cheaply. And we manage 2,500 clients in IP Global with their assets, so we know what the yields they're getting. You know, in places like Malaysia, you can get about 6-7%. Here in Singapore, it's more sort of 3 or 4. But if you're only paying 1% on the interest rate, and that's a good thing about low interest rates at the moment, so it's very much market to market. But Singapore will, what we say, sort of wipe its face. It'll be just about cover your mortgage payments.
What are some of the, I don't know, disaster stories that you've come across in investing in property?
Yeah, there've been a few. I'd like to say, you know, no one would believe me if I said I hadn't made mistakes, right? So I bought a property in Spain about 5 or 6 years ago. We were just talking about Spain before, and that's been a bad one for me. You know, it's a holiday property, and I really, as I say in the book, I don't believe in holiday properties. I don't want 52 tenants a year. I want 1 tenant a year. A lot of people didn't look after the property, and the yields were very poor. So, you know what, I locked the door on it now. We maintain it, and in a few years I'll come back and have another look at it. But that's about the worst one I've done.
One piece of advice you give in the book is not to get emotionally attached. Tell us more about that.
Well, yeah, I mean, I think that Spain is a good example, right? I bought it, had a nice sea view and everything else. And some of the best property investments I ever made were not attractive properties. And we get investors now at my company asking about, you know, what colour's the kitchen scheme. And, you know, I really think that's irrelevant. You know, you're buying as a pure, cold-hearted investment. And, again, that's what I've taught our investors in IP Global to do, to really think about this as a pure investment. You know, don't be thinking about if you're not going to ever live there.
Yeah.
So... You know.
And ground floor, for instance, is not necessarily a bad thing, is it?
Well, quite often they're the cheapest price per square foot.
Yeah.
You know, in some parts of the world, ground floor is not secure in terms of, you know, if you've got a young lady, you know, renting it, they might not like the bottom floor, but maybe the first floor. But, you know, for sure, the rent, normally they're the cheapest ones, but the rent on the 5th floor is the same as the rent on the 1st floor, so your yield will be better if you pay less for the property.
I guess different people, because I know in some places, as you go, the higher you go, the more it costs, in fact. And no, rent isn't the same. I know in some countries, the higher up you are, the more you can charge, in fact. So it depends on the environment, the culture, the country that you're in.
It does. I think if you're on the 30th floor and you're looking at the ocean, you're going to pay more rent. But if you're on the 3rd floor or the 6th floor, I can guarantee you in almost every market we've got property in 18 countries, and 3rd to 6th floor, the rentals are virtually the same, but you will pay less for the lower floors, for sure.
And you say invest in Asia. Why? Why Asia?
Well, we've got demographics on our side, right? I mean, if most of the world populations are shrinking, and we've got that great advantage of a mass growth in populations. Vietnam will double its population in the next 20 years. We're all urbanising. You know, okay, we're 100% urbanised in Singapore and Hong Kong, but of course China isn't, Vietnam isn't. These markets are urbanising and don't have enough supply of property. So,
what about Cambodia?
Again, same story. I mean, that's one of the only markets with no growth, significant growth so far. And it's the only one to still not come on board. But there's some challenges still with the developing economies.
So if people out there thinking they want to invest in something, what are the top 3 things you would tell them to consider first?
Number 1, make sure you can own the property. I mean, some of the laws of ownership around the world and Asia are quite challenging. So make sure that you can secure the asset by owning it in your own name. Number 2, get mortgage finance. You know, leveraging is extremely important in terms of return on capital. Number 3, find out how much tax you're going to pay. You know, some markets are very tax efficient and some are not so.
And there you go, that was Tim Murphy, a property analyst on investing in Asia. He's also got a book out. It's called How to Make Money in Asian Property. You know, I like living on low floors. What about you?
Well, I currently do live on the ground floor, so I have to like it no matter what. But, yeah, no, it's okay, and especially, I guess, living in here in Singapore, it feels relatively safe, so I have no problem with the ground floor.
Okay. Well, if you'd like to find out more, he is in Singapore this weekend for book signings. Details, I think we have them on the website. If we can just put that up, there you go. So you can catch up and take a look at the book if you're interested in making some investments in Asian property.
I think location is not only key, but doing your research is the bottom line, isn't it? Research, right time, right place, whole lot of factors.
And having a whole lot of cash that you don't really need for a long time. So that makes it easier.